Hello and welcome to Switzer Investing Insights, brought to you by NAB Trade. And today we want to discuss the issue that lots of people are thinking about, particularly with the stock market continually rising when most people thought it would be under pressure for quite some time. And that question is, will the stock market see a second big leg down? Paul?
Well, I think it's interesting to say, Peter, that bear markets typically have multiple legs down. And for all the data, went into a bear market in Australia. We've been in one in the US. You could argue maybe they've got out of it, but the history shows that bear markets typically do have multiple legs down. Remember the GFC, Peter, of course. That actually started in about the latter half of 2007, went on to early 2009. And the second leg that occurred post-Lehman was actually bigger than the first leg down.
Yeah, it was about 39%, wasn't it?
Yep, so that was a big fall. And the big issue, I think, which is arguing about potentially for a second leg, is that no one actually knows how long the economic disruption will be and how long it will last for.
Yeah, the lockdown, closing down effectively a big chunk of the world economy, ultimately, if that's shorter than what we expected, well then markets will like it. I think markets are hoping that's the case, but if it's longer than expected, that could cause a second leg down. And Paul, I think we've got to understand this is a government-created crash, isn't it? And so, in a sense, a government can actually unwind this if all the world governments say it's now time to reduce the closures, reduce the lockdowns, and all of a sudden, economies and confidence views on the economies will improve, and that will help the market stay up and avoid a big leg down. And finally, I think it all gets down to the infection and death rates. They have become the statistics that most people in the markets watch, and they've been heading in the right direction, and that partly explains why we might not get a second big leg down.
Okay, so let's look at what could actually cause a second leg down.
Yeah. So first of all, I think if the USA really finds it difficult to get on top of its coronavirus infections and death rates. At the moment, the markets believe by the end of April, the wave, the actual curve will be flattening and eventually hitting a peak and falling away. If that doesn't happen, there'll be a second leg down. And
the USA is much more important than Australia here, right? So we're going to follow whatever's going on in the USA.
Yeah. International markets will follow what's going on in the USA for sure. And I think the next issue is around, will there be a second wave of infections? I think if that happens, the market would hate it.
Well, we won't know that for some time, Peter, will we?
No. And I think evidence so far suggests that China and South Korea aren't having significant second wave issues, but clearly the market's watching this. I think if the containment period is lengthened longer than what the market's expecting, once again, a second leg down. I think there's a collapse of a major financial institution, Paul, but my argument is I think central banks are rescuing financial institutions no matter what.
Well, they are, and I think that's probably one we probably could almost rule out, but you can't say that couldn't happen. The last one, Peter, of course, is US reporting season, which is now underway, and this will go for the month of April and go into the early part of May. Look, expectations are pretty low. I think the market thinks maybe profits will be down on the average around about 12%, but no one really knows.
No.
Because the coronavirus came late in the quarter. It's very hard to gauge the impact. I guess that they'd be more looking at just the nervousness of company executives and CEOs, just how worried they are. And if there's a lot of worry, that could spook the market.
Yeah, and I think the bottom line is any CEO or CFO who's trying to make a prediction about the next quarter really doesn't really know, because they don't know when America comes back to normal. So it's going to be guesswork, and I think there'll be cut some slack in that sense if the outlook statements aren't all that positive.
So let me put you on the spot, Peter.
Yeah.
Will there be a second leg down?
I think there'll be another sell-off, but I do not think there'll be another big leg down like the first one. The first one was so fast and so deep. I think it reflected there was so much uncertainty. No one knew about government's rescue packages. No one knew what the central banks would do to rescue the situation. So I think it would be profit takers more than anything that will take the market down, or else if some really bad piece of news comes out of left field, then the market would sell off.
Yeah, I'm probably not going for a second leg down a bit like you, Peter, but I think the market has to get some idea of how we're going to recover. A lot of talk about recovery. No one really knows how that's going to play out, and the market needs to get a sense of that. And I think there could be just a little bit more nervousness as we start to see some of the debate about what the recovery looks like, and the question marks about U-shape or V-shape or L-shape or whatever it is. So that's my take on a second leg.
Yeah, without a doubt. And I think, Paul, the important point is this: if the market does sell off, I think it is another buying opportunity, provided you have a 2 or 3 year perspective on your investments. That's Switzer Investing Insights brought to you by NAB Trade. Thanks for joining us.